Welcome back. You're watching the special show based on the monetary policy minutes that have just been announced. Remember, the two members of the MPC, Dr. Jayanth Varma and Ashima Goyal, argued for a change in the stance and a rate cut, but the majority of four members, the three Reserve Bank members and Dr. Shashanka Bide, the external member, argued for status quo on both rates and on stance. I've been speaking with the external members, Jayanth Varma, Ashima Goyal and Shashanka Bide. Gentlemen and Ashima, thank you very much for your patience. Dr. Bide, what would make you vote for a cut?
Well, I should say that we are in a position where we are looking at the lower inflation rates and also, as I said earlier, fairly strong growth. And therefore, I think, what the concern is actually, would be that the lower inflation rates that we are looking at also are on the back of this high food inflation. And therefore, I think moderation in the food inflation rate going forward is important. And that's one of the risks, I think, that we are looking at. How good the monsoon would be, what the impact of that would be on the food inflation. And I think, so as a result of this, I would like to see that the inflation on the major components of the basket of consumption is moderate. I think that would be an important consideration, I think. The transitory changes in the food prices and so on is something that obviously can be overlooked. Yeah. But we are at a stage, I think, where we are looking at inflation rate close to 4% and maintaining the momentum of growth at the present rate, I think would be sufficient to take a call on the policy stance.
Okay. Dr. Varma, the point that Dr. Patra makes is that certain important food items like cereals, pulses and vegetables are consistently higher and gives the fear that their persistence can spill over into the non-food areas as well. And he also points out household inflation expectations has actually inched up a bit, something which even Goyal agrees to. So you think that that's a fair caution?
No. You see, I think there are... Again, I would go back to what has been the experience in the last year or more. Have we ever seen evidence of food inflation seeping into headline? The answer is no. There has been no evidence for all of that. This is simply a fear that we have in our minds. In a well-functioning inflation targeting regime, this should not happen. In a well-functioning inflation targeting regime, relative price changes should not produce changes in the price level. It is true that certain climate-related things can cause a change in relative prices. Maybe agricultural goods need to become more expensive relative to industrial goods or whatever. But that does not mean that general inflation level goes up. That does not happen. And we have zero evidence of that happening in practice. And I think there is no theoretical basis for that as well, so long as the credibility of the monetary policy is intact. And we have every reason to believe that the credibility is intact. Yeah. So I don't see that as a matter of concern at all.
Okay. Well, I guess if the RBI members were here, they would argue that the credibility is good. I guess Dr. Bide is smiling. The credibility is high primarily because they are insisting that they will not move till they see a definitive move towards 4%. I assume that would be Dr. Bide's argument. But I'm running out of time. This was the last sitting of the three external members whom I'm speaking to. So a quick takeaway from you, Ashima Goyal, on what would you advise? Is there anything that should change in the way the MPC is functioning? Or do you think this is an institution that has genuinely succeeded?
Yes, I think that we need to be happy for the country that it has succeeded. Because in this MPC, we saw with very adverse supply shocks. The first MPC oil prices had crashed. We saw with very adverse a series of very serious supply shocks. We were still able to keep inflation within the tolerance band and moreover have one of the highest rates of growth, have a very robust growth recovery from the pandemic. So I think the lesson that you should take back in comparing these two periods is that flexibility is very important. In the first period, the real rate stretched 3 and 4%. The focus was just on structural, on inflation targeting. This time it was counter-cyclical.
Yeah.
We helped during the pandemic with a lot of liquidity rate cuts, and we tightened very quickly when there were signs of persistence. So this is what makes inflation credible, not insisting on the target, but making sure that the real interest rate is positive and enough to take inflation to the target. And that is what we did, and we have delivered. With 1% real rate, core inflation has fallen to 3.1, the lowest ever. And core is sensitive to real interest rate. So why do you need an even higher real interest rate? You want to take core to 1%? You want growth?
Now you're going very close, perilously close to what the economic survey said, that you should remove food inflation altogether from the calculation. Dr. Bide, last thoughts on that? Would you? Sorry, I'm running out of time, Ashima. I'm really sorry. Ashima, Dr. Bide, what would your takeaway be? Do you think that, by the way, we should ignore food inflation and concentrate only on core?
No, I think obviously we should be looking at the entire consumption basket. And I think the point about food inflation versus other prices is not simply that whether there is a spillover from the cost side to the other prices. But that, I think, it's one of the supply side inflation stories. You can't do a great deal through monetary policy to control this supply side inflation. But at the same time, I think we need to look at the entire basket of consumption. So now I completely agree that the weights that are used for getting to the headline inflation, there is something that has to be based on the current data. And that will make some difference, I think. But that will still retain the target for the consumption basket as a whole.
Okay, just a final word. Dr. Varma, would you go back with the regret that for, I think, 2/3 or even more of the period when you were a MPC member, inflation did not come to 4% at all? I think it was at 4% probably 5 or 6 months. Or will you go back with the positivity that inflation was well within the range and growth actually delivered? What's your final takeaway of this period?
I would definitely don't think that there is any sense of regret. I would only think that in challenging times, I think we did our best. Whether that our best was good enough is for others to judge.
Okay.
I would not want to say that we did a good job.
Okay.
That is for others to say. And I think in October, there would be new faces with new thoughts, new perspectives on this. It is very important that monetary policy doesn't get caught in a rut of the same kind of thinking. There is need for new perspectives. So when the Monetary Policy Committee is refreshed, I'm sure there will be fresh thinking, and the inflation targeting regime will work out.
Well, the global certificate clearly is that during this period, India has done excellently well, both in terms of balancing inflation and growth. So the external certificate is extremely positive. It's very humble of you not to take that credit yourself. Thank you very much. It's been a pleasure interacting with you, Dr. Varma, Dr. Goyal and Dr. Bide. It will not just be 3 new external members. If the governor's term also is taken as ending seriously in December, we could have another new RBI member. And if Dr. Patra's term ends as it is supposed to in Jan, we may have an all-new MPC perhaps a year from now. But the institution seems to be seems to have delivered, and I think the baton will be passed on very well. Thank you very much for joining me on this special discussion, the RBI monetary policy.